Alright, let's talk about XRP. Wait, come back. I know what you're thinking, didn't Ripple's lawsuit with the SEC kill all the hype? But hold up. There's something happening here that might actually matter long-term. Not just for XRP holders, but for the entire DeFi space. And no, it's not about the price spike you missed. It's about whether blockchain can finally solve a problem it's been stumbling over for years: utility. Let me explain why this week's update from Flare Network might be way more important than the crypto Twitter hype train wants you to believe. So, XRP's trading around $1.08. Yawn, right? The chart looks like a bear market napalm. But here's the twist: Flare just dropped a technical upgrade that lets you stake XRP with one signature instead of two. Why does this matter? Because billions of XRP have been sitting in wallets like digital gold bricks, doing absolutely nothing. Now, imagine if suddenly those bricks could generate yield without leaving the XRPL. That's not just a tweak, it's a potential game changer for how we think about idle crypto assets. Personally, I think this is the kind of infrastructure play that separates crypto's future from its speculative past. Now, let's address the elephant in the room: the Federal Reserve. Everyone's obsessing over whether they'll hike rates again. But here's what many people don't realize: crypto doesn't just react to rate changes, it reacts to uncertainty. The 35% probability of a hike isn't just a number. It's a psychological landmine for traders. When you've got macro jitters, assets like XRP become collateral damage, even if their fundamentals are improving. In my opinion, this is why the ETF inflows look weak right now. People aren't betting on XRP's tech, they're just hedging against a market they can't predict. Technical indicators. Let's not sugarcoat it, the chart screams trapped. The 50-day EMA at $1.13 is acting like a brick wall, and the 200-day EMA at $1.42 feels like a mythological creature. Everyone talks about it, but no one's seen it up close. But here's a perspective shift: maybe this consolidation phase isn't weakness. Maybe it's the market waiting for a catalyst. The RSI at 46 isn't panic territory, it's indecision. If Flare's staking adoption picks up steam, could that 1.16 super trend line actually become a launch pad instead of a ceiling? I'd argue it's possible, but only if the narrative shifts from XRP versus SEC to XRP as yield asset. Let's zoom out. Flare's upgrade isn't just about staking, it's about trustless finance. By keeping collateral on XRPL and minting FXRP automatically, they're solving a huge UX bottleneck. One signature staking sounds minor until you realize most DeFi protocols still require users to jump through 10 hoops and sign away their firstborn. This non-custodial approach? It's the opposite of FTX's playbook. And in a post-2022 world, that's not just a feature, it's existential. A detail I find fascinating: Flare didn't just simplify staking, they made it feel safe without sacrificing decentralization. That's the kind of innovation that builds ecosystems, not just price pumps. But here's the deeper question: can utility alone rescue a token stuck in a bearish structure? XRP's history as a remittance tool is proven, but remittances don't make markets rally. Narratives do. Right now, the narrative is split between Ripple's legal drama and DeFi's next frontier. Until that resolves, we're stuck in this purgatory where every rally gets sold. What this really suggests is that XRP's next bull run isn't about charts or rates, it's about storytelling. Will Flare's upgrades convince the world that XRP isn't just a lawsuit token, but a yield engine? If they do, $1.42 might not be a myth after all. Until then, though, we're just watching paint dry on a very expensive canvas. What do you think? Ready to stake that idle XRP, or are we all just waiting for the SEC to finally call it quits?